the fourth time in history. Now, the Dow keeps going up over time, so 2,000 is not as significant a number this time around as maybe last time around.
But still rarefied territory. It doesn't happen that
rare.
much. Yeah.
A couple more stats for you. This is the worst two-day rout for stocks since March of 2020. Going back to the pandemic, we erased nearly 1 year of gains in the past few weeks in the market. And the NASDAQ is what we call bear market territory. That means when you have lost 20% of the value since its recent high. It entered that territory today. The S&P 500 is entering that territory. Just means investors are feeling very scared. All the sectors were down, and tech really took it on the chin, which we talked about yesterday.
Right.
It hurts your 401k.
That's right. And tech, because they both have component parts coming from overseas, and they have huge markets like Apple, 15 to 20% of their market in China. Speaking of China, what are you seeing in this response from China?
So China slapped 34% retaliatory tariffs on U.S. goods, and that's not going to make goods more expensive for us here. What that means, it's going to be more expensive for Chinese citizens to buy American goods. Think about the big companies, right? Apple, Nike, Tesla. But what really, I think, was reflected in investors today is they see that as China is determined to fight, and we are heading towards a global trade war. And where you get concerned about that is that's when consumers spend less, prices are higher, and you really saw that in the price of oil, because oil hit its lowest level since April 2021. And you're probably thinking, oh, but my gas prices are
People
going
are like,
be
hey,
low.
that's
This
great.
is fantastic.
Yes, so explain why oil being low is not the good news one might think it would be.
Energy drives production. When you're manufacturing, when you have lots of activity and your economy is booming, you need oil. The fact that it went down is reflective that investors think we could be heading towards slowing economic growth, and you would need less oil because of less production.
Let me grab that for a second, which is that when you hear the administration talk about what's happening right now, they say, well, this is the market. It's not the real economy. They'll figure things out. What I hear you saying in oil, and correct me if I'm wrong, is businesses that use energy are making choices about what the future looks like. And that is affecting the oil market. And the bet that they're making about the future is that it's not going to be a roaring future full of a lot of economic activity, that it's going to be a less strong economic period. And that's why oil is, the bets are that there's going to be less energy used. So that's not just people trading in the market. That's real businesses making real choices about what the future looks like. Do I have that right?
Well, because oil is traded on a global market. You buy and you sell. So that's exactly right. And the reason is tariffs, because if prices are higher, businesses are going to buy less, people are going to buy less, and therefore you produce less. Kelly
O'Grady walking me through economics, for which I am grateful. We're going to turn now to White House correspondent Weijia Zhang, who is in Florida with the president. Weijia, what was the president up to today while the market took its second dip, and what did he say about it?
Well, John, just a few minutes ago, President Trump returned to his Mar-a-Lago resort after spending the day at his golf club. But he also spent the day very active on social media, trying to convince Americans of what he is saying. He's saying even though the markets are spiraling right now, ultimately they will boom. And he had some pretty direct messages. First, to the investors who might be spooked about pouring more money into the U.S. He said that my policies will never change, and this is a great time to get rich. He also criticized China for those retaliatory tariffs on American exports, saying that Beijing played this wrong. But the president also revealed that when he said he is ready to negotiate, he means it. He said he was on the phone today with the General Secretary of the Communist Party of Vietnam, and he claims that that leader says Vietnam wants to bring the tariffs down to zero for American goods if they are able to strike a deal. And he said that the two countries will be in touch in the coming days. And then finally, President Trump had a direct message for the chairman of the Federal Reserve, Jerome Powell. This is not the first time he has sent this message, but he says to Powell that this is the time right now to cut interest rates. And he said it in all caps, John, which if you have seen any of Trump's posts, you know that's when he really wants to emphasize something, saying cut interest rates, Jerome, and stop playing politics. Now, recently in the Oval Office, I asked President Trump if he thought that the Fed should listen to him, and he said yes. John?
Well, that's so interesting, Misha, because I believe Kevin Hassett, the top economic advisor to the president, said relatively recently that markets have benefited over history when central bankers are independent of the political forces. So that would put him at odds with the president, who is putting political pressure on Jerome Powell. Can I ask you a question about when the good times are going to roll here? If the White House says that these are the birthing pains, if you will, my expression, not theirs, between the past and the new global trade order that they've been talking about, when's that going to kick in where people can stop feeling the sense of nervousness that all our reporting says they're feeling?
Well, remember, John, just 2 days ago, we were talking about Liberation Day. And in Trump's mind, that is the U.S. being liberated from a reliance on foreign products because we are going to enter a new golden age for American manufacturing. So the question is, when could American manufacturing really get up to speed where we are not relying on so many products from elsewhere? And it's interesting, John, because the White House has been pretty hesitant to attach any kind of time frame to that. But yesterday, President Trump said it would take about 1.5 years or 2 years for manufacturing to get up to speed. That is a long time when you're talking about people who want immediate relief from high prices.
And I mean, not to get basely political here, but of course there are off-year, non-presidential year elections at about that time frame too. So that will be an interesting confluence of events. Weijia Jiang, traveling with the president. Thank you. We were talking about the Federal Reserve Chair Jerome Powell, and let's listen to what he said earlier today.
It is now becoming clear that tariff increases will be significantly larger than expected, and the same is likely to be true of the economic effects, which will include higher inflation and slower growth. The size and duration of these effects remains uncertain. While tariffs are highly likely to generate at least a temporary rise in inflation, it's also possible that the effects could be more persistent.
And we're joined now by CBS News senior business and technology correspondent Jolene Kent. Jolene, one, any reaction from you to what Chairman Powell there said? And I know you've been paying special attention to small businesses and how they're sorting all of this through. So what are you hearing from them?
Well, the remarks from Chair Powell are sobering. This is something that comes with a chair of the Federal Reserve who's very measured in his response to economic data, very careful about the political environment. So when you're a small business and you're hearing Chair Powell talk about these types of persistent inflation risks, that does not feel good. A lot of small businesses that we've been talking to have already told us, look, we survived the pandemic. We have been facing persistent inflation, and now we're basically, many feel that they're sandbagging ahead of what could be a flood of new challenges. So looking ahead, what can small businesses do? Well, a lot of them say they're going to hold off on hiring. That's likely to affect the labor market writ large. Of course, so many small businesses making up the fabric of our economy, right? You also may see a cut to profits. Orders get slowed down, growth also slowing down. And the issue here is that there's so much desire for certainty. The small businesses were hoping to get that from President Trump this week. They got the opposite, and they are not sure how bad it will get. So they're just bracing for any outcome and scenario. John.
All right, Jolene Kent, thank you so much. Our coverage will continue on CBS News 24/7, on your local news, and tonight on the CBS Evening News. This has been a CBS News special report. I'm John Dickerson.